I think silver will likely test its highs. I don't see it breaking
Okay.
the $30 level this year. And the main reason for that is that industrial side. I think that keeps it from really breaking out. Now, granted, from $21.80 right now where silver is to $30 is still a tremendous return just to get back to those highs.
Gareth Soloway talks about the positive outlook for gold and how it will outperform other assets. He believes that gold is putting in a bull flag that started in 2020 and will eventually bust out to the upside and have a big move up. He also mentions the historical pattern of gold's price during the 1970s inflationary period and how it is repeating now. Gareth Soloway expects a 4x or 3x return in gold over time, but not a 9x return.
Your outlook for gold, though, is still very positive. You still hold the view that gold will outperform other assets this year.
Yes, and I continue to be in that camp, and it's having a beautiful move up today on the day. Obviously, fear, any sort of fear, instability. Number one, people run into the U.S. dollar right now. Number two, gold is that recipient. And weirdly enough, I know we'll get to it, but recently Bitcoin has been the recipient as well, which is really fascinating to see. But for me, gold is putting in a bull flag that started in 2020, and at some point, this is going to bust out to the upside and have a big move up.
Gareth Soloway's prediction for the bottom of gold in 2023. He believes that the October 2022 lows, which were around $1,615, will be the low for gold. He also talks about a beautiful channel that needs to be broken through to reach the double top high of $2,070. Once that happens, Gareth Soloway expects to see money rush into gold as investors look for alternatives to stocks during a recession.
If you look at the 1970s chart, this is the same pattern price. In fact, I'll show this real quick. So we had this start here in 2018 on the chart where we went up for 2 years to 3 years. We've now consolidated for 2 to 3 years. If we go back to the 1970s, we can see that same sort of pattern recognition during that inflationary period. Gold went up for 2 years to 3 years, consolidated, and then the next rip took it from about $110 to almost $900 an ounce. Now, again, I don't think it's going to go to do a 9x or anything like that. I think a 4x, 3x is probably more in line because people have an option of Bitcoin and crypto now. But nonetheless, the history is repeating here as the inflation numbers are repeating.
Couple of questions on gold. A 4x over what time period?
I think, again, if you go back to the 70s, that occurred over about a 5-year span, 5 to 6 year span. So that's a pretty darn good return. We haven't seen returns on that in gold since the 1970s. That would be sweet.
Are you ready to call a bottom for gold for 2023? Yes. What level is that at?
I do think those October 2022 lows, which were around $1,615, I do look at that as being the low. You have a beautiful channel. We just have to break through that channel, which is around the $1,955 level. If that happens, you'll test 2070, which is that double top high.
He believes that silver is underpriced at the moment due to the slowdown in the industrial side of demand. However, if inflation stays high for a longer period of time, silver will rush up and eventually outperform gold. Gareth Soloway still likes silver as a long and expects it to perform well in the late second half of 2023.
Let's just stick with the precious metals for a while, because you did say that you thought gold and silver would outperform other assets this year. The gold-silver ratio currently around 83. Do you think that silver is underpriced? Does it have more upside percentage-wise than gold at this point?
It is slightly underpriced, but for good reason. So we have to remember it's an industrial metal. So if the thinking is like mine, that again, the economic situation is going to slow down, then the industrial side of demand is going to slow as well. And I think that's why you're seeing that underperformance in the near term here. But ultimately, it's still a metal. And if inflation stays high for a longer period of time, you are going to see silver rush up, and eventually it will outperform gold, like historically it has. It's just this period of uncertainty with the economy and likely recession is keeping it under wraps. I still like it as a long, though. I think for me, the pure play for being protection player of my assets, gold. But if you want that beta, that alpha, I should say, that return, then silver is where you got to look, probably late second half of 2020.
He predicts that silver will test its highs, but will likely not break the $30 level this year due to the industrial side holding it back. The breakout for silver is predicted to occur in 2024 with the expectation of a return to industrial demand.
I think silver will likely test its highs. I don't see it breaking the $30 level this year. And the main reason for that is that industrial side. I think that keeps it from really breaking out. Now, granted, from $21.80 right now where silver is to $30 is still a tremendous return just to get back to those highs. But again, my guess is the breakout probably occurs in 2024.
In 2024. And what would trigger that?
I think that's just kind of more of the same in terms of the economics picture, maybe getting a little clarity, maybe a return to kind of a little bit more of industrial demand as we get later in 2024, or at least the expectation of that. And then it becomes the asset to be in with inflation still elevated.
He also talks about geopolitical developments and their impact on safe haven assets like gold and Bitcoin. The recent conflict between Ukraine and Russia and the shooting down of a U.S. surveillance drone over the Black Sea by Russia are discussed. Gareth Soloway believes that this is not a cause for concern at this point and is a normal tit-for-tat reaction. They also discuss the pressure being put on Russia through the oil markets.
To be honest, I'm not super concerned at this point if we saw ratcheting up of the aggressive stuff past this point. But I think right now, this is par for the course, which is you have a little tit for tat kind of thing going on where Russia just says, hey, listen, you guys are supplying Ukraine with all this aid. We're going to do these little things to at least show you that we have some strength and we have some skills to make you hurt a little bit. It doesn't remedy the situation. But for me, I mean, to be honest, look at the oil markets. Is that not the biggest kind of pressure that you can put on Russia right now? And when you see this drop, again, do I think that the drop in oil was directly related to this? No, but do I think that also you could also view it that this is actually putting more pressure than anything else that the U.S. could do to Russia? Yeah, so you have to connect the dots. Maybe there's something there.
Okay. One final question for real. You did say, we did discuss that everything is correlated in a way. You said if everything goes down, well, perhaps with the exception of gold, you said Bitcoin goes down, if the markets go down, oil goes down, that all of these assets get swept together in this fear trade. What is the way to diversify then? What is the best uncorrelated sort of long-termish move?
So for me, it would try to be diversified in some of the metals, specifically gold. I think gold miners will really start to benefit. If we remember when inflation was at 9%, gold miners did horribly because the price of gold wasn't keeping up with their costs going up. Now we see gold starting to go up, and that's where the miners can really thrive. So if we see inflation, let's say, coming down to 3%, but gold's up 20% a year, those miners are going to be just absolutely in a perfect scenario. So gold miners. And I think you start looking at some of the defensive plays, like what do people still need in a recession? They need drugs. So something like Amgen would be an interesting play, trading at the lower end of the chart recently, and maybe something like an IBM that pays a good dividend. I think people have to start looking for the safety play versus the tech trade. The tech trade honestly has been so hot the last few days because everyone's rushing out of banks. I think that's a false flag, if you will. I think you got to be a little careful with the tech stocks because when a recession does hit, they're going to be the ones hit the worst.